EPK Capital presents Daily Brief for 24th October 2025. Hello, and welcome to EPK Capital's Daily Market Briefing. I am your host, Rutvik, bringing you the most critical financial news and analysis from the last 24 hours. Today was a day of recovery for US markets, a day of stunning economic divergence between Europe and Asia, and a landmark day for the crypto community in India. Investors juggled rising inflation data, ongoing political gridlock in Washington, and new geopolitical tensions, ultimately deciding to focus on one thing: the high probability of a Federal Reserve rate cut next week. Let's get right to the numbers. The closing bell, market snapshot. Starting with the US markets, we saw a solid rebound across the board, erasing all of yesterday's losses. The S&P 500 closed at 6,756.25, gaining 0.58%. The Dow Jones Industrial Average finished the day at 46,794.62, up 0.31%. And the tech-heavy Nasdaq Composite led the gains, closing at 25,183.03 for a jump of 0.88%. This recovery comes after a rough session on Thursday, where markets were dragged down by disappointing earnings from major names like Tesla and IBM. Today's optimism suggests investors are shaking off those earnings concerns and looking ahead to macroeconomic drivers. Over in Asia, the session was a tale of two very different economies. Japan's Nikkei 225 surged, closing up a very strong 1.48% as investor confidence returned. However, the story in India was more subdued. The Nifty 50 and Sensex saw a volatile and mixed session. Early week optimism about an imminent US-India trade deal faded after the Indian Commerce Minister offered more cautious, non-committal language, leading to some profit-taking. Across the Atlantic, European markets also finished a strong week in the green. The German DAX was a standout performer, fueled by blockbuster economic data that we will cover in just a moment. The pan-continental Stocks 600 and London's FTSE 100 both advanced, with the FTSE trading near its recent record highs. The macro data drivers. Today, the market narrative was written by three key data releases: German PMIs, Indian PMIs, and the long-delayed US inflation report. First, the big surprise: Germany. The German economy, which has been a source of concern for much of the year, just posted a stunningly strong number. The HCOB Flash Composite Purchasing Managers Index, or PMI, jumped to 53.8 in October. This wasn't just a small beat, it crushed forecasts of 51.5 and marks a 29-month high for the index. This powerful rebound was driven by a huge resurgence in the German services sector, which hit its highest level in over 2 years. This data strongly suggests that the Eurozone's largest economy is entering the fourth quarter on surprisingly solid footing, which provided a major boost to European stocks. Second, the cooling signal: India. While Germany surprised to the upside, the data from India pointed to a slowdown. The HSBC Flash Composite PMI for India fell to a 5-month low of 59.9. Now, to be clear, any number above 50 indicates expansion, so 59.9 is still a very strong growth signal. However, the report showed a distinct loss of momentum in the dominant services sector, which is what weighed on the composite number. On the bright side, the manufacturing PMI component actually rose. This data suggests the rapid pace of Indian growth may be moderating. Finally, the main event: US CPI inflation. In the United States, all eyes were on the September Consumer Price Index, or CPI, report. This data was delayed by the ongoing US government shutdown, but was released this morning at 8:30 a.m. Eastern Time. The market was bracing for sticky inflation. The consensus forecast was for headline inflation to accelerate to 3.1% year over year, up from 2.9% in August. Core CPI, which strips out volatile food and energy, was also expected to hold firm at 3.1%. Following the release, markets held their ground and then rallied into the close. This positive price action tells us two things. The inflation numbers, while elevated, held no major negative surprises for investors. More importantly, the market believes this inflation print will not be enough to stop the Federal Reserve from cutting interest rates at its policy meeting next week. This brings us to the bond market. The yield on the 10-year US Treasury, a critical benchmark for global borrowing costs, held firm around the key 4.00% level. This stability, even in the face of 3% plus inflation, shows that the market is fully pricing in a more dovish Fed. Political and geopolitical movers. As always, we must look at the political headlines that are moving money. First, the US government shutdown is now in its 10th day. While the BLS did release the CPI data today, most other key economic reports, including the non-farm payrolls, remain delayed. This is forcing investors and the Fed to fly with less visibility. Second, President Trump's actions on trade and sanctions are having a direct impact on commodities. On Thursday, the White House announced new sanctions on major Russian oil producers, including Rosneft and Lukoil, citing the ongoing conflict in Ukraine. This news immediately sent oil prices spiking. West Texas Intermediate, the US benchmark, jumped nearly 5% to over $61 a barrel, and it held those gains today. This, of course, adds to the very inflation pressures the Fed is trying to fight. On the trade front, while the US-India deal optimism has faded, investors are now looking toward an upcoming summit between President Trump and Chinese President Xi Jinping, which is helping to ease broader trade war fears. The Crypto Corner now. For our final segment, the world of digital assets. The biggest story in crypto today, by far, is the official relaunch of WazirX. The major Indian cryptocurrency exchange has resumed operations today, October 24th, more than a year after a massive $230 million security breach forced it to halt services. This is a phased relaunch. Starting today, WazirX has re-enabled trading for 25% of its listed tokens. The platform plans to be 100% operational by this Monday, October 27th. To welcome users back, the exchange is offering 0% trading fees for the first 30 days. Critically, WazirX has announced a new partnership with BitGo, a global leader in digital asset custody. This move is designed to restore trust and provide users with institutional-grade security for their assets. This positive news appears to have buoyed sentiment in the broader crypto market. Bitcoin is trading up today, hovering around $110,980. Ethereum is also seeing solid gains, trading near $3,950. Conclusion. So, to summarize the day, it was a risk-on session for US and European stocks. A blockbuster PMI report from Germany overshadowed a cooling report from India. And in the US, investors took the new inflation data in stride, remaining focused on their belief that a Fed rate cut is coming. Geopolitically, new sanctions on Russia have sent oil prices higher. And in the crypto world, the relaunch of WazirX marks a major milestone for the Indian market. And that's all we had for this video. Thanks for watching. If you found this video valuable, please hit the like button, subscribe to our channel. Just a quick reminder that this video is for educational purpose only and should not be taken as financial advice.